Okay, let's dive in. Today, we're looking closely at a specific source, stocktelescope.com.
That's right.
Specifically, their GameStop Corp, GME, stock forecast, which came out June 11th, 2025.
And our goal here is pretty straightforward. We want to pull out the key takeaways from this one document about GameStop's investment picture right now.
Exactly. Just unpacking what this analysis says.
And we need to say this loud and clear up front. This is purely for information. It's all based on this stock telescope piece.
Yeah.
It's absolutely not financial advice, not investment advice, nothing like that.
Definitely not. We're just exploring the analysis presented here.
Okay, good.
So what really strikes you first in this stock telescope analysis is this big contradiction they lay out.
Yeah, it's a real paradox.
They call GameStop a high-risk speculative hold. I mean, that phrase alone tells you something's up.
It really does, because on one hand, the source talks about this fortress balance sheet. That's their term.
There's balance sheet.
Yeah, meaning tons of cash. The document mentions $6.39 billion.
Wow, $6.39 billion.
Which, as the source notes, is almost half the company's market cap. Huge financial flexibility there.
You'd think with that much cash, things would be looking great,
Oh,
like
yeah.
they'd be expanding or something.
Well, that's the other side of the paradox. The source argues this cash pile exists even while the main retail business is facing really serious structural problems.
Structural headwinds, yeah.
And it questions how management is actually using that cash, pointing to things like the move into crypto.
Right, okay. So the source paints this picture of a company swimming in cash, but the business itself is, like, struggling to stay afloat.
Pretty much. The analysis notes the stock's around $30 right now,
Okay.
but it flags this really, really high PE ratio, price to earnings. It's cited at 91.36.
91? That seems very high.
It is. It suggests investors are paying a huge premium compared to the actual profits the company makes currently.
And how does that compare to what analysts think, according to the source?
Well, this document says the analyst consensus is actually a sell,
A sell, okay.
with an average price target of $13.50. So that implies like a potential 55% downside from here, based on fundamentals.
And the source links that bearish view back to the business problem.
Exactly. The core struggles and the attempts to transform that haven't really worked out.
Like the digital stuff.
Yeah, the analysis gets into the digital efforts. It specifically mentions the NFT marketplace they launched back in 2022.
Oh, I remember that.
Well, this document points out it was shut down in early 2024. Less than 2 years.
Didn't last long.
Nope. Generated minimal volume, apparently just $22 million total. Tiny fees for GameStop. The source just calls it a strategic misstep, flat out.
Okay, so that didn't work, and then they moved to Bitcoin.
Right after that, yeah. The report mentions a big $513 million Bitcoin purchase in March 2025.
$513 million.
And the source compares it to MicroStrategy's playbook, but argues, it doesn't really connect with the main retail business.
No synergy there.
Right. Just adds a lot of volatility to their finances, basically, instead of fixing the underlying problem.
And the underlying problem, according to Stock Telescope, is the gaming industry itself changing.
Exactly. The huge shift away from physical games. Digital downloads are just dominant now.
Which hits GameStop right where they live, in their stores.
Absolutely. It erodes the whole foundation of their traditional model. And the numbers cited seem to back that up.
What does it say about sales?
Well, this report notes Q1 2025 revenue dropped almost 17% compared to last year.
Ouch.
Yeah. Sales down pretty much across the board, hardware, software, accessories. The only growth area mentioned was collectibles, up 55%.
But not nearly enough to make up for the core decline, I guess.
Doesn't seem like it. And they're closing stores too, divesting international parts of the business.
So the picture this analysis paints is cash rich, but revenue poor.
Yeah.
At least in the main business.
That's a good way to put it. The cash is strong, gives them options, maybe cushions the downside risk a bit.
Right.
But the core operations just aren't generating profits like you'd expect, given all that cash sitting there.
The source even makes a point about interest income, right?
Yeah, that was interesting. It points out that the money they make just from interest on their cash now actually exceeds the operating income from, running the business.
Wow. That really highlights the stress on the business model, doesn't it?
The source argues it's a clear signal, yeah. And it leads to questions about capital allocation. Like, how are they deciding to spend this massive cash pile?
Putting big chunks into volatile stuff like Bitcoin or needing these convertible notes the source mentions?
It doesn't really look like traditional investment in growth, does it? It suggests they might not have clear, productive uses for the cash within the actual business.
So it's this really complex situation described in the document. You've got the strong balance sheet, huge cash.
But then these really deep ongoing problems with the market and their operations.
Yeah.
And what this stock telescope piece really seems to emphasize is that while the cash is a buffer, it doesn't actually solve that core problem. Hence the high-risk speculative label.
Makes sense. Okay, if you found this deep dive useful for getting up to speed quickly on this particular stock telescope analysis, definitely subscribe to the deep dive.
Yeah, and this analysis leaves us with a pretty big question directly from its findings for you to think about.
Okay.
Given GameStop's got all this cash, billions, but it's really struggling to make money from its main retail business, and it's pivoting to highly volatile things like Bitcoin.
Yeah.
What does this source suggest about just how hard it is, fundamentally, to turn around a legacy retail company when the market is digitizing so fast?